Good morning. Thanks so much for tuning in to Buy Now, Sell Now. This is ET Now. My name is Alex Matthew, and joining me to take you through the next 1 hour is Cheryl D'Souza. Well, it's been a dismal start to trading this week on Dalal Street, and well, the reason for that is, of course, what you already know. It's that there are worries that this current second surge in COVID-19 cases, the second wave that we're witnessing, is going to somewhat affect economic growth going forward. That is what perhaps the most prominent fear that investors are currently faced with. You have about 2.1% losses on the benchmark indices, and in fact all of the sectoral indices at this point are losing ground. Of course, earlier in the day you had in fact worse cuts, and we've recouped some bit of ground. There's just a little bit of ground that has been reclaimed, but still looking terribly weak at the moment. The biggest cuts, of course, coming in for the banks, down about 4%, the Nifty Bank, as we speak. The mid-cap and the small-cap indices reflecting the mood in the broader market as well, both of them down over 2%. In fact, earlier in the session, they were down as much as 3%. So very clearly, the mood is risk-off at the start of Monday morning. Among the other sectors, in fact, you have the Nifty Pharma that has reclaimed a bit of ground. It's now trading with cuts of less than 0.3%. So if at all you want to look at some bit of positivity, it is in that space. And in fact, the biggest gainer on the Nifty as we speak is currently Cipla and Dr. Reddy's, the two of them doing reasonably well in trade as of now. Cheryl?
Yes, definitely the market setup looks very weak today, Alex, given that the spike in COVID-19 cases, definitely that sort of sentiment is rubbing off on the bourses as well. But let's bring on board our guest for today. We have Kunal Bothra, as well as we have Vijay Chopra joining us. But Kunal, I'll come first to you. The market setup, I had heard you this morning that the trend in the market setup is actually changing quite a bit from buy on dips. It is becoming actually a sell on rise sort of a market.
Absolutely, Cheryl. So it's becoming, more of a, sell on rise market. There are two important observations which I want to highlight, on that, front. So one of them is, the gap supports which the markets, gaps on technical basis, generally act as strong, zones of resistance or, supports, depending on where they occur in the price charts on the indices. So what had happened was, post budget, on 1st or 2nd of February, from there on, when the market started to move up higher, you saw sharp recovery. There was a gap up which was created. Now that gap up apparently acted as more of support zone for the index. That support, zone for the index was at 14,300 mark, which was the gap which was created post budget. Now from there on, you saw the index climbing up 1,000 points. And then we saw a corrective phase coming from the month of March itself. Now in this corrective phase, we've tested that gap support low of 14,300. I think today is the fourth test of the support level, which means that the resistance is falling on the indices and the support is getting continuously tested at 14,300 mark. Eventually what happens is, if a support gets tested time and again, supports get yielded and you see the supports being broken. So now I think it's a matter of time that you'll probably see the breakdown of this 14,300 mark. And I think that if that happens, then you could see some incremental selling on the indices. So short term wise, yes, the 14,300 support is a very strong support, but with the consistent testing of a support zone, it's very much possible that the market structure may change and you might see the support breaking down. And if that happens, we can expect another 300 to at least 500 point selling on the index. So this 14,300 is a very strong support zone for the index. And if we break, we are closing in the gap, as well as we are trying to confirm a breakdown of this major support level index.
13,300, like Kunal said, is a major support, or rather strong support coming in for the index. Kunal, so what are your picks for our viewers today then?
Suggest a couple of offbeat themes in the market. So I'm suggesting two buy calls, but as I said, it's more of offbeat theme. First one is from the pharma pack. It's about Apollo Hospital. Apparently this stock is making fresh swing highs for itself. And the best part about the market is that not all sectors and all stocks are the ones which are dropping down significantly. There are still some sectors and stocks which are showing signs of resilience. Pharma, of course, being one of them. So would suggest to buy an Apollo Hospital. The fact that the stock is confirming a swing breakout for itself. Targets to be kept at approximately 3,250, 3,300 range, and stop loss could be kept at 3,050 mark. The second one is again an offbeat theme. It's about MCX. Now on the gold chart, in fact, last week or the week prior to that, I had done a chartbuster segment on gold, mentioning that how this asset class is nearing a bottom, a multi-month, multi-week bottom, and could be in for a stronger recovery. We've seen gold prices rallying from 43,500, 43,000 to 47,500 on the INR terms. Now, in that sense, I would expect many of these gold-related stocks as well to try and pick up pace. Would suggest the buy on MCX in that same aspect. The fact that the stock has already gone through a more than a 20% correction makes it a good risk reward to enter at these levels. So would suggest a buy. Targets to be kept at approximately 1,575, 1,580 range, and stop loss at 1,455.
All right, Vijay Chopra is joining us as well. Vijay, good morning to you. Thanks so much for joining in. Very quickly, could you take us through the high risk and low risk ideas that you have, and then we'll launch the conversation that we've set up for our viewers, which is on the large private sector banks.
Good morning. I think that no point of being in the high risk ideas when the markets are volatile and we are seeing already a 400-point downside on the Nifty. On such a day, there's no point of unnecessarily jumping into high risk ideas. But again, I would recommend 3 stocks today. My first call would be a buy call on Infi, which is showing a lot of resilience, and from the downsides of 1338, it's trading at about 1357. I think that this stock can go up, and my target for Infi is 1440, 1450. So there's almost a 90 to 100 rupees upside from here. My second recommendation would be again a buy call on Cipla. So this stock, in the midst of this mayhem, it is showing a lot of resilience, a lot of strength. Presently, the futures, the cash is at 944. It could be bought for a target of 1,000. And I think that Cipla, which is a market leader in the pulmonary space and is also a very major, pharma behemoth of our country, is well placed to ride the tide. So Cipla can be bought into. And my final recommendation would be a buy call on Glenmark. Although the stock seemingly is in red today, trading at 562 odd. But I think that this stock can also head to 600. So Glenmark is also a buy call from my side. So I would recommend all these 3 conservative companies as of now, IT and Pharma. And it's better to conserve cash because, when we see markets crashing and, I still feel that, there might be a level of 13,500, 13,600, which we might see in the coming days because this pandemic can go haywire and can spoil the sentiment as of now. So I would say that better to keep cash in hand or be in the conservative side. So no point of unnecessarily punting and getting into high risk ideas.
Absolutely. In fact, a bad idea to try and catch a falling knife. On that note, let me launch the conversation that we've set up for our viewers today, which is on large private sector banks with, in fact, a check on HDFC Bank's results, which, as you know, were announced over the weekend. Poonam is joining me right now. She's been tracking this very, very closely. Poonam, good morning to you. What is the fine print that you're picking up when you look at the numbers?
Well, I would say it's been a resilient quarter for HDFC Bank. In fact, if you look at their absolute GNPAs, it's a jump of nearly around 70% quarter on quarter, but the GNPA ratio came in at 1.32% versus a 1.38% in terms of the pro forma GNPA of the last quarter. And also management does state that they have good amount of floating and contingent provisions, would make their total provisions at 153% of the total GNPAs. They also reported a fairly healthy operating profit growth of nearly around 19% Along with stable margins, balance sheet is resilient and a healthy advances growth. Management does state that the disbursement in the autos and two-wheelers have reached pre-COVID levels and they do see good demand there. They are confident of maintaining or gaining market share, and also retail assets have picked up nearly around 6% quarter on quarter. Wholesale book will also be reaching the pre-COVID levels. In fact, HDB Financial also GNPA was lower than the pro forma GNPA of the last quarter. Brokerages maintain their buy. CLSA states a buy with a target of 1825 and states HDFC Bank remains pandemic proof. With 110 bips credit cost in a COVID-19 year, strong operating profit, but we need to be watching out for the growth outcomes. Jefferies has a buy. They do state that resolution of the IT review is key. However, they have trimmed the estimate slightly, but they still see an 18% CAGR there, and they also see a fairly strong CASA growth. So all in all, brokerages to continue to maintain buy on HDFC Bank.
Thanks so much for that update, Poonam. Let me go across first to Vijay on the fundamentals. Vijay, coming to you, we just had a review somewhat of HDFC Bank's results, and perhaps that will give us a flavor of what we can expect with regard to some of the other private sector banks as well, particularly ICICI with its kind of exposure to retail lending or overtaking its corporate lending book. But in the context of what we're seeing, 2.7 lakh cases of COVID-19 reported as of 8 a.m. this morning, with this second wave of the pandemic, would you say that it's necessary to pause and reflect and to see whether or not you have to review your expectations for FY22 for these large private sector banks?
There are a few things which should be noticed. One is inflation. So as I mentioned earlier, I think on your show as well on this channel, that my sense is we might see hyperinflation creeping in, and we are noticing that inflation numbers are at a 6-year, 7-year high, the WPI, and we are seeing almost a 2-year high on the retail inflation. And this might go higher because higher commodity prices would push product prices further, higher fuel prices would again push prices further, and we are heading into summers, so food inflation, especially vegetables and all, they are going to cost much more. So I'm seeing some kind of a inflationary scenario in the coming few months. So with this kind of a scenario, as they say that if at all we are noticing growth, so inflation comes as a side effect. So it will be there for some time. Now there is definitely a risk wherein we might see the interest rates getting revised on the upside. So if at all we see interest rates hardening, then it would be very difficult for banks to show a run-up which they have shown in the last 1 year. So, and secondly, with this kind of phase 2 of the pandemic, and we are seeing lockdowns again. Some of the states have already started implementing lockdowns. Look at Rajasthan, what it has done. I think that there is going to be some kind of an aftermath, and we are going to see some business getting hampered. So smaller loans, SME loans, and retail loans definitely get affected. We see people losing jobs, and due to that, they are not able to pay up their liabilities. I don't know whether the finance minister is going to come up with another stimulus that I'm not aware of, but if at all it is there, it is again not going to be very good for the banks, because it is just I would say a stopgap arrangement. It's not fundamentally very strong. So again, coming to the point that how do I see private banks? Although HDFC Bank is one of the best banks, and it's my great favorite, and I have been recommending the stock for over, I think, 2 decades now. But I would say that these are the times when we should stay away a bit. And I'm also seeing some major downside on the Nifty, another 500, 700 points. So let's wait and watch. No point of jumping into the bandwagon and buying banking stocks as of now. I do not see a reason. But people who are already holding it, I would again say that, these are great banks, and they have seen they have tested the times, and they have seen ups and downs, crests and troughs. So don't get worried and don't get bogged down by these the downsides in the market. HDFC Bank is a fairly strong bank, and it's going to come back very sharply.
All right, that is a view coming in from Vijay on the private sector banks and how does he see the scenario going ahead for the large private sector banks. Kunal, I'll come to you. At what point of this sort of a correction does it become a buying opportunity for these large private sector banks?
Very difficult to say, Cheryl, because a lot of factors are at play. So when we look at the markets comparison with the global market setup, I think, of course, the setup on the global markets is extremely buoyant, and it indicates that probably the markets, could get back. So once this, COVID fear, abates, I'm of the view that we'll see a much more stronger recovery than what we have seen, a very choppy kind of a correction in the markets. But then, what happens is when the markets go into a downward spiral, a lot of the sentiments go into negative. There is a lot of fear, a lot of withdrawal of money and funds, which happens into individual stocks and sectors. Now, if you look at the performance of the private sector banks, and I think that's where one has to take cognizance, because if you're looking to park money in the banking names, you need to understand that which have been the stronger performers and which have been the ones which can probably give you relative outperformance. So what I've done is I've done the 1 year analysis of the private sector banks, like what we did for Pharma and IT index earlier in the previous week. Now, out of the observations from the banking names, it stands out that Axis Bank apparently has been one of the top performers in the last 1 year in terms of returns. The stock has outperformed its other peers. But then the point to understand is that it's not that the stock has outperformed the peers like ICICI Bank or HDFC Bank by a huge margin. It's a very tight kind of a race between these four key private sector banks. So I think it tells you one very important observation, that it's more of a synchronized move which you're seeing into the banking names. These stocks are dependent on each other to try and outperform. It's not as if that you have one strong outperformer from the entire sector like what we've seen in the pharma or in the IT stocks. So for Bank Nifty, I think it's more of a synchronized move, which is why I think calling that which could be a stronger outperformer from here on could be a difficult task. But then if someone is looking to diversify, then I think parking money into these three or four key private sector banks, I think could yield some good returns over the near to medium term.
All right, gentlemen, a very interesting conversation to set up the query segment, which we'll be taking next. Do stay with us, and viewers, we'll be back in just a short while, and we'll take all of your questions live. So get your questions ready on social media.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and it is time to take the viewer queries. Remember, for all of our viewers, we are live on all the social media platforms, YouTube, Twitter, Facebook. You can catch us live there. Send in your queries and all of them will get answers. So let's get going with the first query for the day, and this is from Nino Kuruvilla. She's asking, is it prudent to enter GNA Axles at current level for long-term investment? Coming to you, Kunal, on this particular stock, definitely had a good movement over the last 1 year, but does it make sense right now to enter this stock for a long haul?
Not a bad chart. I think the stock recovery has been quite strong from 130, 140. Somewhere in March 2020, it's recovered to almost 400 plus, which it tested few months back. So I think it's been a good recovery, 3x, almost a 2.5 to 3x kind of recovery into the stock prices. Now I think like what happens into a routine correction, that the stock is as well as going through a time correction. So it's a good stock. It seems to be a good stock. The only catch with these kind of names or offbeat stocks is the low liquidity which is present into these names. So that's the only catch with stocks like GNXL. But I think a buy and dip strategy could be a good strategy. You can start at current levels of 350 approximately and look at adding for the stock at every 10% drop. I think that could be a good strategy to average GNXL and then hold on to it from a longer term view.
All right. Manas Gore has written to us saying that he's bought Tata Chemicals at 816 rupees per share. He wants to know what's the outlook for this particular company for about for the next 1 year. Vijay, I'll come to you on Tata Chemicals. Definitely the buying price is at a higher level over the last 5 days. This particular counter has seen a sharp downtick as well. But how's the outlook looking for Tata Chemicals over the next 1 year?
I think that there are certain things we need to understand. One, that Tata Chemicals has, I'm just telling about the valuation piece, so don't worry. Number one, it holds about 2.5% in Tata Sons. In Tata Chemicals, we also have Rallis India, which is a pharma company, so that business also is in Tata Chemicals. Apart from that, they have Tata Salt and Tata Sampann brands, which are also contributing a large chunk to the business. Apart from this, they have Tata Green Batteries, and the biggest thing is, which is a futuristic business, that they are going to set up a state-of-the-art plant in UK for EV batteries, and they are spending big time to create India as a big hub for EV batteries in the coming years. And I think that Tata has the capacity and capability to do that and become a global EV battery brand. So I'm not at all worried about Tata Chemicals, and it's a great company, great portfolio stock. And if at all you can buy more around maybe 720, 700, if at all it comes a bit lower, it would be a great buy at these levels. So just keep on accumulating. I see Tata Chemicals at 1500 to 2000 with 2 to 3 years perspective. And this gentleman seemingly is a long-term investor. So Tata Chemical has a lot of value. The real fair value of the stock even today is about 900 rupees. So don't worry, you're buying an undervalued story, and there's a very good business in store and a futuristic business which gives a lot of confidence.
Vijay, so sorry to interrupt. We have to take about 15 to 20 queries, so I'm going to request you to keep your answers a little shorter. We're going to go across to Kunal now for a view on Crompton. We've got Tarun who's asking whether it's a good time to buy at this moment.
So I think it's been a phenomenal stock, done extremely well at 370, 372. I think it's just about nearing a support level. So I would suggest that buy on dips. I think it's a good stock to hold, done extremely well in the second half of 2020 and in this recovery of post-COVID as well. But I think buy on dips could be a good strategy starting from current levels and adding at maybe a 340 or 335 levels if the stock happens to correct to that zone.
Slipping into a short break as of now. We're slipping into a short break as of now. We'll be back on the other side with a lot more, so do stay tuned.
Welcome back, and let's quickly get on board our next viewer query, and this one is specifically for Kunal. Rajan Vittal is asking your view on Kotak Mahindra Bank and wants to know whether it's a good time to enter and hold for the next 1 year, Kunal.
I definitely think so. I think it's a good stock to hold on. The best part about the banking stocks, as I was highlighting earlier, was that these stocks have already gone through a 15 to 20% correction on large cap names. Now, in any kind of a bull market or a strong uptrend, a 20% correction into the stocks, makes them as very good entry point. And we are talking of not mid cap names. We are talking of classic large cap names. So I think at 1690, 1700 zone for Kotak Bank, it's also nearing its 200-day moving average, which I think, if I'm not wrong, is at 1650 level. So I think it's a good point to start buying Kotak Bank at current levels, specifically if you have a longer term view.
I want to mark what you're seeing on the bottom of your screen. Sources are telling us that the Delhi government is likely to impose a curfew beginning tonight till next Monday morning in a bid to curb the COVID-19 cases. We'll bring you more on that in just a bit. For now, let's go to the next query. Danny Varghese is asking about Aarti Drugs. And Vijay, coming to you on this one, what are the long-term prospects? Would you say it's a good opportunity to buy?
This company is into APIs, and I think that all the companies which are into APIs, they've been doing fantastically. So I would recommend a hold on this stock, and I would say that this company would keep on showing 20-25% return year on year. So it's a portfolio stock according to me. So just hold on to the stock, and I'm sure that there's good money to be made over a period of time. My personal target for this stock is over 1,000 rupees. So keep on holding it.
So a viewer queries come from Krishna. He's saying that he's bought Canara Bank at 133 rupees per share. He wants to know, would you recommend to average out and buying it at dips? And the time horizon is that he's a long-term investor as well. So Kunal, what's your take on Canara Bank? What would you recommend the viewer to do?
Very tough one. PSU banking stocks had a fantastic run, start of 2021, where many of these stocks had given returns of 40% to 50% in a very short span of time. And now the markets are, or the sector is sulking in as well in a very similar kind of a magnitude. Canara Bank, I think, is a very tough, one to crack because the stock is high beta, and it, if I have to suggest, I'll probably suggest that shift to SBI. That's a more stable stock. And when the PSU banking stocks had rallied, SBI was one of the first stock to hit back above its lifetime high levels and go beyond that as well. So I think if I have to advise, I would advise that shift from Canara Bank to SBI. And even if the stock goes through another maybe a 10%, 5% correction, look that or take that as a good averaging opportunity, and specifically from a longer term view. So I would suggest a shift from Can Bank to SBI.
All right, coming to you for the next one, Vijay. This one is from Shrikant. He's asking about Sequent Scientific. Is it a good stock to add for the long term?
Well, I think that it's a good company, and it primarily works in the animal health space and agri space. And I would say that, although this stock has shown a fantastic run up over the period of last couple of years, but still, I think there is still steam left. So it can be bought into, and if somebody has already bought it, I think that it can, even stretch up to 300. So no problems with the stock, so to say. Just keep on holding it.
Next viewer query is coming from Shanti. He's saying that please suggest a good entry price for AU Small Finance Bank. Is it likely to correct on account of lockdown in Rajasthan state? What's your view on AU Small Finance Bank, Kunal? How does the chart look for this particular counter?
Very high beta stock, completely, I would say, off the characteristics of the private sector banks, which tend to be more stable on the charts. Off late, specifically in the last 1 or 2 months, the stock, for example, has corrected from 1300 levels to 1000 levels, so more than a 30% correction in the stock price in just a matter of 1 month, at a time when many of the private sector banks had corrected just about 15 to 20% odd. In terms of support levels or a good entry point, I would suggest that if the stock comes back to its 200-day moving average, that could be a good zone for you to start buying AU Small Finance Bank. I think that level is closer to 900, 910 for AU Small Finance Bank. So I would suggest that if the stock comes back to that kind of a level, which is 10% lower from the current market price, then I think you should look to start buying. But just one catch, that it's a high beta stock as compared to the other private sector banks.
All right, the next question coming to you on this one, Vijay. I'm hoping that you have a view on this because it's a micro cap stock. Vimta Lab is the counter that I'm talking about. Srinivas has a question asking whether he should enter for at least a year.
As I don't track the stock very actively, but again, I can look at the charts. I would say that, the stock has the potential to go up to 300 odd if somebody holds with a long-term perspective. Although, as I said, I do not track the stock actively. But again, as I said earlier, I think that Aarti is a much better company to have it in the portfolio rather than Vimta. So I would say that these are times when you should go with names which are more stable, balance sheets which are better, and companies which have showed growth and resilience in these times of pandemic. So no point of jumping here or there. I think that Aarti is a much better company than Vimta.
The next query is coming from Abhishek Kohli. He wants to know what's the view on IDFC First Bank. Vijay, you'd like to take this particular query?
Well, I think that IDFC First Bank is, with a longer term perspective, I like the bank. At these valuations, the valuations are very, very convincing. And I think that, if somebody starts nibbling at these levels, it can go up to 70, 75. So it's a great risk reward at this point of time. Looking at the balance sheet and the growth prospects and the size of the bank and the management at the helm, which are primarily, very seasoned people in the banking space. So it's a great risk reward. Buy at these levels, keep on nibbling. And I think that the stock can go up to 70, 75 comfortably. It's a good return.
The next question I'm going to take is, well, it's not necessarily a comparison that you would normally see, right, Vijay? But you've got KK, I believe he's trying to decide which to add to his portfolio. and he's looking at Bata India as opposed to SKF India. Which one would you suggest is a better entry?
Bata has shown weakness in the recent times. So SKF, I would recommend an SKF which is trading at about 2100 odd, has the potential of going up to 2500. So SKF seemingly on the charts and fundamentally looks much better than Bata as of now.
All right. There is another query that's coming from Jignesh. He wants to know the view on NIT Tech, also SCI as well as IDBI. But SCI and IDBI on back of the divestment candidature. Vijay, what's your view on both of these counters?
IDBI, I think that at these levels, it is a very convincing valuation. We have to understand one thing, that LIC also is a stakeholder. And if LIC is going public sooner or later, there's going to be some kind of a value unlocking happening in IDBI. So I would say that, at these levels, it can be nibbled into, and not a bad idea to have IDBI in the portfolio.
All right, let's get just one more question in. If we can get a question in on Bajaj Finance. We've got Mukesh who's asked a question. Can you buy Bajaj Finance at the current price? Is the question, Kunal.
I think it's a tough one again, because Bajaj Finance has been one of the large cap financial services stock which has corrected very sharply. It seems, that any time when the market shows signs of weakness, we see Bajaj Finance, falling very sharply. So that's not a good sign that, the stock is very susceptible towards, selling pressure. This generally indicates that the selling is not over for the stock. And, you could probably see a drop of another, 300, 400 points possible on Bajaj Finance. So if the query is restricted towards short term, I would suggest that wait for some more time, maybe another couple of weeks. Let the stock or the selling settle off. If that happens and the stock settles down below that 4,000 mark, I think then it could be a good entry point for Bajaj Finance.
All right, Vijay, our next viewer queries come from Anup Kumar. He wants to know about Kalyan Jewellers. What would be the right time to enter this particular stock, or rather what would be a target price to aim for Kalyan Jewellers?
Well, I think that the company is still very new, and forming a view on such a company which is recently listed, we do not have much data, but I think that, there are better players in this space. I think that, be with Titan. If somebody wants to be in the jewelry space. So I like Titan, and if at all the market touches about 13,600, I would recommend that buy a Titan and not a Kalyan Jewellers. Although it's a very new company, with all due respect, I really don't understand about the fundamentals and the financials as yet. Let it post few results and let it prove its mettle in the market for some time. So I would recommend a Titan over Kalyan Jewellers.
All right, Vijay, on that note, thank you so much for joining in and for sharing your views. Kunal as well, thank you so much for taking the time. Both of you have a lovely rest of Monday. Hopefully things get better in the second half of this trading session. But let me go across live now to Ruchi Bhatia, who's joining in with the latest updates that are coming in from New Delhi. Remember, New Delhi, like places like Maharashtra, dealing with a spurt in COVID-19 cases. And we're learning that perhaps the government is going to step in to curb the spread of the virus by imposing fresh restrictions. Ruchi, what are you hearing?
Well, absolutely right. We're given to understand that the restrictions are going to be imposed in the national capital. This even as the national capital is seeing a massive surge in COVID cases. Just look at the last, numbers from the last 24 hours. New Delhi has reported fresh infections of close to 25,000 cases, and besides that, a positivity rate of close to 29.7%, which goes to show that 1 in every 3 people are infected by coronavirus. We're seeing a lack of beds, lack of medical oxygen, lack of important drugs like remdesivir in the national capital, and that's precisely the reason that we have seen the Delhi government now stepping in. After the weekend curfew, we're given to understand that the Delhi government is likely to impose curfew for the next 1 week or so. This is to, of course, contain the spread of coronavirus. This even as traders have also said that they will be imposing a self-imposed lockdown in all of the big markets, whether it is Lajpat Nagar, Chandni Chowk, Karol Bagh. So all of the other important markets will remain shut as well. The Delhi government had said that they will not impose a lockdown because they are concerned about the livelihoods of people. But clearly the situation is out of control. We do not have enough beds in the national capital, and which is also one of the reasons that the Delhi government reached out to the central government as well, especially the Railways Ministry. They have asked them to convert coaches into beds with high flow oxygen and make at least 5,000 beds available over the next few weeks in areas such as Anand Vihar railway station as well as Chakur Basti as well. Besides that, we're given to understand that the other facilities, whether it was in Yamuna complex or areas such as Radha Swami Satsang Byas, in terms of beds, will also be made available in the next few days. The situation in the national capital really a cause of concern now. With the lack of, as I said, beds as well as the high-grade medical oxygen as well that we're seeing, and which is why now the Delhi government has decided to go ahead with this lockdown at a time that the big focus now will be to contain the spread of coronavirus. In fact, Chief Minister Arvind Kejriwal is set to hold a press briefing at about noon today, and we will be hearing more about that in that press briefing.
Definitely, Ruchi. Situation in the capital is pretty grim and across the country as well. Thank you for getting us that latest coming in. That the sources are saying the Delhi government is likely to announce curfew from tonight onwards. The announcement will be the announcement is likely shortly. That is when Delhi Chief Minister will be addressing at noon. So that is a crucial development for all of us to watch out for. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. But stay tuned, more on the other side. So don't go anywhere.